Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, December 3rd, 2021. Third video of the day. Obviously, a lot of things moving, hence I'm going to step up the analysis. And this is a little bit different video. It'll be relatively brief. There were quite a few good questions put to me under the last video I put out earlier today, Swing Trade Ideas number 2. So these questions pretty much are everything I want to cover. It's going to include something about the broad market, where we may go from here, how we ended the week, and then some follow-up on trade ideas. So let me start out here. I'm just going through this order. You can obviously come into the site and check these. I always encourage you to come back into the site and check the comment sections, because sometimes I'll add additional comments or notes to a post that I made if I forgot something. And then there's also great questions put there. So starting out here with Becky. Becky asks, Randy, can you please have a look at T, which is AT&T, and then VZ, which is Verizon? All right, so here's my reply. I'm going to read, well, I can zoom in a little and you might be able to see it in the video. Okay, so first of all, I pulled up VZ, and I'm glad Becky asked. It's VZ, Verizon just hit T1 for a 15% gain at oversold readings on the weekly chart. Here, let me just open that chart up. Again, you can see it here. So believe it or not, VZ was posted as a short trade way back here, and that's over a year ago. And then I gave a link to one of the recent updates on this trade. I mentioned at the time, rarely do I put short trade ideas based off the weekly chart. And as I mentioned in that update that I did, and again, there's a link on it, the second update, the trade was shorted here, I think, on the kickback rally after the bearish rising wedge breakdown. And I said it was unlikely that this first drop of about 22% was it. So we shorted here, and as I said, these trades based on the weekly chart are long-term trades, and usually those are long side trade ideas, usually not shorts, especially in a bull market. But this one was, and that one, what you had here, same thing. You had a big leg down, big counter trend rally, and that's where this time around we shorted it after the first leg down. You know what? Let me grab that actual chart, and you can see I can zoom in a little bit better there. So we're going to go to VZ, and then I'll get to Bitcoin and the markets and everything else. So all right, so this is it. I'm going to zoom in nice and tight. This is the parameters on that trade. The entry price right here was at 57.94. Again, sometimes if I miss an initial breakdown, I'll sit patiently and wait for the snapback rally, and that's what we had here. So I doubted that 22% drop was it. We shorted there, and I did an update here, and it came close. Look at this, 1, 2, 3 weekly runs at the stop, but since it was based on the weekly chart, my parameters were stop based on a weekly close above 61.73, which was never violated. Came close. Those are intra-week pops, slight pops above it, but closed back down below it. So that was a well-placed stop. Anywho, we hit it. So it took a while, and that's why I haven't done updates on it. So I haven't been short the stock that long, and I completely forgot about it. But we hit that first target right here today. 51.15 was the target. There's the line. I'm sorry, we hit it Wednesday, but it was this week. So you see, as often is the case, my initial or the initial tag of a price target from when it's a short trade from below will produce a reaction. Now, I'm talking on this one not just to loop back and say, hey, here's a trade from, gosh, over a year ago, a long-term trade that finally hit its target, and I still think it will hit these additional targets. But in the near term, I'm bullish. One of the better looking stocks. I still have my concerns about the markets, but number one, we're oversold. So what I had mentioned in there, in that post here, let me see, because I already had these marked up. So you look at each and every one of these oversold readings. This is the weekly chart right here. They're all circled, right? 1, 2, 3, and we're going back well over a decade into 2006, 4, 5, 6, 7. I didn't miss a single one. What do you want to do when Verizon's oversold? Do you want to get short or bearish, or do you want to go long? Well, if you stepped in there and bought it, I always say oversold itself is not a buy signal. Oh, I missed one. I got the circle there, but it was oversold there. These were all double-digit returns. Let me jump back to that chart, and I'll just measure them out for you real quick to just kind of illustrate my point here. All right, so that was it. That was the first one. we rallied about 40%. We got oversold. Next time we were oversold, we crossed below it right here. That rallied about 70%. Then we were oversold here, so forth and so on. You can go on there and look at the charts yourself and see what happens. So now, I do always say that oversold is not a buy signal. Sometimes you become more oversold. So you want to align it with other technical factors. And in this case, we have a drop down to support. So that's number one. We hit a pretty good, well-defined support level. It was a price target from a long time ago and still in play. Number two is relative strength. So we hit it so you're not just oversold, but on the daily chart you have positive or bullish divergence. You're also oversold on the daily. We were very oversold, and this is what makes divergence when your indicators are making higher lows. So you're oversold here, and you got a bounce on the daily chart. It was a nice tradable bounce. We went from about $50, $51 all the way up to about 54 in just a week or so. So that was a nice trade. But now we put in a higher low, and here's what's looking good so far. We hit my price target on Wednesday. And then remember, the market's been down the last couple of days, but look at this. And today was the biggest down day in a long time. So this is what you call relative strength. There were not many stocks in the S&P 500 that were up today, but this was one of the few, and it was up pretty nice, over 1.3%. So you got that relative strength, and I laid out a few targets. You could see a potential downtrend line here that'll probably come into play, another downtrend line there, longer term one. And then two horizontal price levels. I gave you about 53. Bottom line, if you just don't want to try to game these not crazy about these lines, I think this one could pop up here unless the market just melts down next week. That's still a possibility, but I can't say it with a high degree of certainty right now, and I'll get to the markets in a second. But I can say this is a very nice level, 54. You have a lot of reactions here, reaction high there, and then another downtrend line that comes in there. So that would give you, if you're looking for long trade ideas, even if it's just a bounce trade, that's about 5%. Obviously, if you're a longer term investor, especially if you're bullish on the market overall, you might say, oh yeah, I want to buy Verizon's, maybe it's got a nice dividend. I'm looking for those type of stocks. And I'm also looking at, each time we became oversold, we're looking at, in the past, at least double-digit rallies. Okay, and the last thing I'll say on it, so assuming that the market is going to go on to new highs, and we're not looking at a major top in the market that just happened recently, and this is early stages down, then yeah, that could happen. I would also say, if you're looking at this weekly chart, I'm going to give you one other line. I haven't modified this line forever. You can see I created that line on the pop-up box back in April of 2020, but I'm going to give you one more line right here as a potential bounce target. It's more of a resistance zone. I think this one could bounce up to about 53.50 up to about 54.36, and so have some potential. No, you don't. Take that away. That's not divergence there because you had a lower low in price. You just have the oversold readings. Last time we were oversold was right there. Alrighty, now moving on back to that post because there's a lot in there. I also gave you a 6-day period chart on that. No, that was a daily chart. My bad. What I mentioned is I added to that the communication stocks look about as good as any right now. I'll have to dig in the charts over the weekend, but as of now, Becky also asked about AT&T, where is it? Here it is. My thoughts on AT&T. I'll get to that in a second. But remember earlier today in one of the videos I highlighted T-Mobile, TMUS is one of my top picks for long side trades. So now you have a bullish case that I just made on VZ, Verizon, and then Becky also asked about AT&T, so I'll go, here's my notes. This breakdown below the nearly 2-decade large triangle pattern was longer term bearish, although the 16% drop since and oversold conditions may lead to a tradable rally soon. And I posted a weekly chart and also a 6-day period. Let's look at those real quick. Again, you can visit on the site. So this is a weekly chart, and it goes back for years. Back in the dot-com bubble, 2000. We have a downtrend line that came into play, and we also had an uptrend line when that bear market ended back in late 02, early 03 right there, right? So there's a big triangle pattern, and this breakdown that we had was bearish longer term. However, that's longer term. We're going back, decades here. And so this stock has already dropped 16%. And there's quite a bit of support. You can see major reaction lows back in 2008, 2009, 2005. A lot of levels there. So uh, again, you can zoom in. You might not see that chart very clear in the video, but I think the case can be made to step in. You might want to scale in. It's not so much of a hard buy, more of a soft buy with a stop somewhat below. And you can see here we're extremely oversold. The last time I've circled all the times we were deeply oversold. Oversold is just a tag of the 30 level. That's oversold, oversold, oversold. And we did bounce on all those, but deeply oversold is when you cross well below that. And there was only really 3 times in the past couple decades. And if you stepped in and bought those deeply oversold levels, guess what? You did very well on AT&T. You as an investor, trend trader, whatever you want to call it. So there's the case right there. Now, based on where we are in the business cycle and the stock market, we know we're in a very frothy bull market. Valuations, insane sentiment. So right now, let's just say my most bullish outlook would be a back test of that trend line right there. And it'd be a nice trade. Let me pull that chart up, the live chart. That was a screenshot I posted, and try to quantify it for you. All right, so we've already hammered somewhat off that, right in that support zone there. All right, let me not give the low because the low already happened. Let me grab it from where we closed today. And if we back test it, and there's some price resistance there as well, I'd say up to about 26.75, and that's about a 15% return. So again, you can look at it as a pure play long if you're bullish. You can look at it as a hedge to short positions if you're short the market. You want to be long. That's how I like to trade. Long the most bearish looking stocks and or commodities or other assets, and then short the most bearish. And then what happens on any given day, I'm not going to be right. Some of my positions will be underwater, and hopefully others will be above water. So that's the key to trading and investing. Don't put all your eggs in one basket. So there it is. AT&T case was made. And that's just that 6-day period. By 6-day period, it's not 6 days. You go back longer in time. It means every candlestick, instead of 5 days like a weekly candle has, you have 6 days. And I do that so I can go back longer in time. And it kind of shows me the big picture, really big picture of AT&T. And it just says, going back into the 90s, this was a key level here. It was resistance for a long time. Then there was a powerful breakout and a successful back test of that level. Then we came down in these bear markets, tested it there. The next bear market, we tested it, and here again. So that's pretty much a long-term case, to step in and buy AT&T. So enough on that. Pass if it's not your cup of tea. But again, we have not one but 3 of the big communication, cell phone companies: Verizon, AT&T, and I even mentioned Comcast today too, didn't I? Yeah, I sure did. So there it is, guys. I think one of my top picks right now for sectors. Let's see. Scott said he added AT&T for his clients. Good call. Hopefully, we'll see if it pays out. Tesla. Somebody liked the Tesla chart. Read. Okay, here next one up. All right, now we get to the markets. Mark asks, could you please post an updated chart of NQ? This is good. So NQ closed the week right on. Let me pull this chart up. Oh, let me read it to you. Closed right on this key 15,700 support level. I'll just pull the chart, talk about it. This one is the. Let me pull the live chart. Let me do that instead. Let me go here to a 6-hour. 6-month chart, 2-hour candles. Okay. All right, very important because this is going to determine where we go from here. So we got some check marks recently on the daily chart of QQQ and the Nasdaq 100, the weekly chart, SPY, everything else. But here's how we finished the week. Remember, this was a major reaction high. That was back in late August, early September. We peaked out in NQ and had one of the biggest drops in months, right? Big correction. Came down there, put in a divergent low, and that's all she wrote. That divergent low on the 60-minute chart was a catalyst for the move to new highs, right? We went on right here. We broke above the that high. So what happened today? Well, we've come full circle. We went from divergent low. We started building divergent high. We had sell signal 1, 2, right, below the trend lines. And then we've been stair-stepping lower. Today, again, I'll zoom in a little tighter so you can see it here. We broke down below that. There's that level. I'm going to round it off. It's about 15,700. That was again that major reaction high. So all this is because we shot through there intraday. This is what I call momentum fueled overshoot. If you've been following me for a while, you know I use the analogy like a catcher's glove in baseball. You know, pitcher smokes a 90-mile-an-hour plus fastball. It's going to hit the catcher's glove, and the glove is going to snap back due to the momentum and then carry back forward. So when you have any security and it's rallying very hard up to resistance, it'll usually shoot through the resistance and then settle back on it. Likewise, to the downside, you come and because there's that momentum, it's in a near free fall, you're going to shoot down through there, which you did. You hit my next target. I had these lines on the chart before, 15,525, and you bounce, and we closed the week right on there. I mean, this is it, 15,687, close enough, right? I had it 15,697. You know, remember that's almost a 17,000 point security or 16,000 point security. So you're talking mere basis points. So that's it. I just wanted to say that that's how we close the week. Not only that, but we also have positive, aka bullish divergence. It's potential divergence. And you got to watch out because in the past, these have been the catalysts for the next leg up or at least a significant rally. Now they're barely there. That's about flatline divergence. We have almost equal lows in the PPO right there versus much lower lows in price. So it's certainly divergence, and then you have higher lows. So there's positive, aka bullish divergence, and again, you can see how we snapped right back to that previous high right there. So that's where we closed the week. And next week, we're either going to move down. If we can't hold this level, if we can hold here and rally up and start to move up, it's going to confirm these divergences, and it could set the stage for a rally. At that point, the same targets I had on the way down, support levels, then become resistance. But I just want to say it's anybody's game. And really, you know, my thing, I lightened up. I took some profits before the close today. And I even gave them a little bounce in the close. I knew just tell you get this kind of market where you sat if you watched NQ all day on the monitor on the 1 minute charts. It sat there flat, and you almost always get that short covering rally into the close on a weekend when you're down big like that. And we're not in free fall mode yet. You know, it was a decent down day, but nothing big. Certainly not, you know, panic waterfall selling. All right, that's it. Let's not make any more of that. We parked right on that previous reaction high. In fact, let me look at QQQ. Let me pull that up for you. QQQ, 60-minute chart. There it is. We came down. We hit T1 earlier today. Effectively hit T2. Remember, these are unadjusted targets, so you want to cover a hair above the actual support level. And then that's it. We bounced right in the close to end right back on T1. T1 was set. The resistance was, or the support was that previous reaction high right there. So again, all this is, if you take away all the lines and all the noise, it is a breakout, and you'll see it clear on the daily chart. There it is, very clear. There's the high. I had that line there at 382.80, same line. Undershot it and closed right on it. So we have the divergence. The divergence, I could see the potential for another kickback rally, but we don't have to have that. So like I said, I'll have a better idea next week if we break down, and I'm favoring. I'll just say it as we head into the weekend. Even if we bounce early on in the week, I think we're going to break that level and come in and check at least this trend line, and quite likely the 200-day moving averages, which are even lower down there around under 360. So that's where I think we're going. But again, you can't bet it hard into a weekend. You have 2 days of extra overnight risk. Alrighty, let me take it home here with the last update. Oh, there's two more. Natural gas. Yeah, somebody I haven't covered it in the last day or two. Is natural gas still a long play? My reply, yes, NG still offers an objective long off the $4 support with the bullish divergences still intact for now, but with stops somewhat below as it's still on an intermediate term sell signal following the recent primary uptrend line breakdown and divergent high on the daily charts. Okay, so it's one of those things. You can step in and buy, just don't get married to it. Here's the chart I put up, the 120-minute chart. This is the same as that uptrend line on the more significant daily chart. It's our primary uptrend line. We put in a divergent high there. We broke it. We back tested it several times. And then we broke this level of consolidation, the 4,823 support. Let me see if I can zoom in on this and move it over here. I'll need to do it like this. Nope, that screws things up. Hold on. Okay, this is the best I could do right now. Again, on the chart I already posted, but again, you can go on the site and see it under that last post in the comments section. Click and expand it there. So what do we have? We have a really good, this was a target to the downside, 455. We had a target here that was hit. I thought we might get a bounce, but we didn't. We had divergence there. And that's the thing, we had a more significant, more powerful sell signal on the more significant daily chart, and so that's what sometimes you'll burn through divergences, but you have to respect them. So we still have, in this one also by the skin of its teeth, because you have flatline divergence on the PPO, upward sloping divergence on the RSI, and much lower prices. And we've been holding that support level for the last couple days. So it's simple. You can take a shot. I mean, the markets are closed now, but Monday if it's still there, with a stop somewhat below. Don't fall in love with it, because if it does go much lower, these divergences are going to be burned out, and possibly this one as well. And then there's really not a lot of support below. There's a little minor support. So you could give it a little room for a little whipsaw through there, but not too much. My targets, I'd still favor a bounce. That's 486 right there, the first one, and then 4823, and I would be out of it. I will be out if it gets there. And depending on what I see, I'll maybe take profits there, maybe game the bounce, but certainly I don't think I don't plan to hold any more past that. That's my max target now, 4823. That's an unadjusted level, actual resistance. You want to sell a little bit below that, or sell some or all of it there. And next one up is Bitcoin. Let's go to that. And so the last question was, would you be able to put a chart or analysis for Bitcoin? So sure. All right. Posted Bitcoin. Bitcoin I put on as a short trade in the November 11th video. There's a link right here. If you click that link and you come in the site, it'll take you to only the coverage, right? Skip forward to the coverage of Bitcoin. So literally the day after it topped, put on as a short, and in that video I stated my minimum swing target and preferred swing target was 41.53, and we hit it today to the button. So I'm glad. This is again why this one little post here has a lot of trade ideas that are relevant right now. So I'm going to try to zoom in for you here, and you know what, let me just pull up the actual chart and I'll show you that. GBTC. Okay, so the case for that was made. We had a major high back here. That's the all-time highs. This is what's been capping Bitcoin. Hard to miss that. So we ran right into that level, reversed, put a little bearish engulfing candle, and just like back then, and it was also a short on the site back here, we hit all my targets back there, reversed it to a long. It was another short there as well, and that's it. So we hit it. During that video I colored up my preferred target to yellow, 41.53. Boom, hit it to the button, and also a momentum fueled overshoot. See that? We had such velocity going down, we overshot it, and boom, parked the day right on it. So if you want to reverse it, I would certainly cover that. That's my preference. If you don't want to risk a big give back in profits, if you're going to stick with it, if you think there's more downside, set a stop. But again, that's a likely bounce target. And not just that, it's not, sometimes we don't bounce off the initial tags of my target, but this is what the 60-minute chart of Bitcoin futures looks like. That was also covered in that video. We had sell signal 1 here. We had a bearish rising wedge with a divergent high, broke down, started moving lower, put in effectively an equal, almost it's a marginal, ever so slightly new high, but all it did is expand the divergence. And then we took out this trend line, and that was your secondary or second sell signal. Then we set up this little level of consolidation right here for the last for a little while. And just like we had negative divergence at the high, now we have positive or bullish divergence right now. And again, you don't see support here on this 60-minute chart because it's a shorter term chart, but I showed you we hit support on the daily chart of Bitcoin GBTC. So my scenario is this: bounce up, ride it up here to first target 56,293, probably get a reaction there, run up to 59,536, and then I'll be out. I don't care to hold out. It could go up more. Again, if you're a Bitcoin bull, same thing. Just trail your stops up and let it run if you think it's going to go to new highs and beyond. But right now, if that target's hit, Well, just take it from where we closed today. That's going to be about 11.5% gain to that second target. Okay, and that's it. So we'll pick it up next week, see what happens on Monday, and then decide whether we're going to go lower or if that's it for now and there may be a tradable rally in the markets and some other things here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.